interest rates, rising prices, and an uncertain job market has made many investment opportunities difficult for many. From gold to housing and stocks, everything has become so much more expensive, especially if someone is looking to buy a home. Housing provides a great investment opportunity as it guarantees a good return over time. However, with the rise in interest rates worldwide, buying a house is almost next to impossible, at least for the middle class. However, there is an alternative. If you want to invest in real estate and can't afford the exorbitant prices, you can look into real estate investment trusts or REITs. This investment product has been the buzz lately. So let's try to understand what these are and how they work. Real estate investment trusts are companies that own or operate properties. They provide an investment opportunity similar to a mutual fund. REITs allow anyone to invest in portfolios of real estates. Most REITs are traded on major stock exchanges. Investors can buy them just like shares. Stockholders earn a share of the income produced by the properties owned by the real estate investment trusts. Most REITs operate with a straightforward business model. They lease space and collect rent for their real estate properties. This generates cash, which is then paid out to shareholders as dividends. These investment trusts can generate returns for investors in three ways. First is dividend income. It's the rent that a company makes from its properties. Dividends can be increased if rental rates rise or if the investment trusts add new properties. The second income source is interest. Many REITs don't directly own properties. Instead, they hold stakes in a special purpose vehicle or SPV. These SPVs directly hold the properties. REITs lend money to the SPVs for construction or management. The SPVs repay these loans with interest over time. Investment trusts can distribute the interest income earned on loans to their shareholders. The third source of income is capital appreciation. REIT unit prices can rise or fall just like stocks. Higher incomes from rent or new properties often lead to price rises of REITs. Just like other investment products, real estate investment trusts also have pros and cons. First, let's talk about the positives. Real estate investment trusts let investors invest in real estate without the headache of buying actual properties. Investors don't have to worry about managing the property. This job is taken care of by the investment trust. Additionally, REITs are affordable for investors. People don't need a lot of capital to invest in them, unlike buying physical real estate. People can own units of REITs for as low as $110. Now let's look at some of the downsides. Income from REITs is taxed as regular income. Since real estate investment trusts pay dividends regularly, this is taxed every year. In contrast, if an investor sells a property or a stock after holding it for a long time, for this they will only have to pay tax that one time. In other words, though REITs provide more frequent income, you do end up paying tax on it accordingly. Additionally, some REITs attract high management fees. It's like the expense ratio of mutual funds. This fee is taken for managing the properties and portfolio allocations. The world's first real estate investment trust was set up in the US back in 1960. It was aimed at boosting real estate development and allowing small investors to participate. REITs have come a long way in the last 6 decades. In 1990, there were only 120 such trusts in 2 countries. As of 2023, there are 940 REITs across 40 countries. Their current market valuation stands at $2 trillion. While the US remains the largest market for these REITs, it is increasingly catching popularity across the globe. Europe and the Pacific have seen the largest growth in REITs since 2020. Europe has around 62 REITs and the Pacific region boasts of 13 such investment trusts. Asia too has embraced the REIT model, growing from 31 REITs in 2005 to 223 trusts across 11 countries by 2022. China officially established REITs in 2021. It has since approved the setup of 29 such investment trusts. India also has 4 such real estate investment trusts, and the first one was set up back in 2019. India's REIT market is the fastest growing in the Asia-Pacific region. According to India's ratings agency CRISIL, India is seeing a surge in well-managed, high-quality properties with long-term tenants. This is crucial for creating a good real estate investment trust. The ratings agency says that India's top 10 commercial real estate owners hold a portfolio of about 184 million square feet of properties. They collectively generate over $20.25 million in rental income. CRISIL says as investor interest in the residential segment declines due to limited price rises of properties, REITs offer a promising investment alternative. These investment trusts offer investors a more efficient way to sell their shares and get cash at their convenience. However, like any other investment product, homework is always important. Before putting your money in, it's necessary to look at past performances and dividend history. And most importantly, the kind of properties that the REITs own.
Across continents, one powerful news source.
Bringing you diverse perspectives on the issues that matter.
We go beyond the boundaries to give you that little extra about every sporting moment. So thank you for making Firstpost 5 million strong. We're counting on your support, and you can trust us to bring you the news unfiltered and unvarnished.
Climate change is on our doorstep. It's time for a revolution to take root. And it starts with 1.4 billion Indians. It starts with one tree for humanity, one tree for Mother Earth, one tree for our future. Project One Tree, a News 18 network initiative.
Obviously today, the T20 World Cup bandwagon has moved across to the West Indies. What can you expect from this?
Hello, I'm Alison Green, coming to you from Durban, South Africa. Today we have a special show.
We'll start with a report on India's shifting nuclear posture. The first time since India officially became a nuclear power.
Hello and welcome to Firstpost America. I'm Aaron Ham, coming to you live from the nation's capital, Washington, D.C.